Hey, what's up, Jace? A quick update because we are not having too much actions after the Fed rate reduction. So it is normal. I already shared the fundamentals in the Discord group. Let me show you what we have for pretty much this week. 1 second. Here, and we go to the economic calendar. So for only USD, we have unemployment claims in Thursday that it's very important we keep follow up for these indicators, especially the ones that directly affect the economy or the consumers. So if we keep seeing this number go low and low and low, we can for sure say that the Fed reductions and the actions, because it's not only the reduction but also the time they took to reduce the rates. It's not only that they did it in September the first time, if I'm not wrong, but that they said at the end of 2023 that they were going to start with the rate cuts most likely at the beginning of the year. So those are also mind games, because the markets will react to whatever you try to point out. So after the February range, let's go to a clean chart. We can work with this. So after the where am I? I'm here. So here's December. We had a big spike to the upside, breaking the only all-time high we had at this particular point before 2024 started. And as usual, we have a very big range period. Especially January shows that every year is a lot of economic things, like for banks and companies and the ones that are moving the money, influence these ranges at the beginning of every year. But you can see when February ends, and we didn't have any rates cut in the first quarter, you can clearly see that the investors are like, okay, so something might be wrong with the USA or the economy, because they're not doing anything, or they cannot do anything, because they had the opportunity, and they also spoke about it regarding the reduction, and they didn't do it. So we enter a period where gold was very, very strong and USD was losing its value. You can see in other coins, I'm Mexican, so the Mexican coin was very, very strong. At one point they were even saying that it was my country's politics and blah blah. But the reality is, here in the markets, my country was not stronger than the USA economy, but USA economy was very, very weak against everyone. Like, not even like, it's uncertainty periods. Your debt is rising, your inflation, your employment sector claims, in this case the unemployment, are growing. What that means, people are not gonna also go to shopping or go to activate sectors that after the pandemic were very punished, like the traveling, some stuff, vacations, go to the cinema, like the little details that really empty the pockets. Those are the ones that really factor in when you don't have a reduction of rates, or your economy is unstable, or your coin will reflect it. So as you can see, we have a very big period of weakness for the dollar until the elections and the first rate cuts that we already covered in the past video. So here I want to show you the last two highs we had. You can see we broke structure after this big drop. We broke the bearish structure, at least here at this point. Then we had a minor retracement and a double top. This means it was also retesting in case something happened, because we still had two more rates decisions, the one of November and the current one, that it's this last drop. So there's two scenarios. Investors don't want to yet drop their positions on gold, but also if they see that the dollar might recover, they need to at one point to be able to drop those gold contracts at the best price possible. But because imagine, price is already here and you bought here, well, this is a very good average. This last high that price touched, it's a very good area, because a lot of pressure is accumulated here, a lot of traders trapped just like here. So once price visit this area and the rates were reduced one more time, investors decided like, okay, this is time for start holding or at least accumulating some dollar in case in the long term the reduction goes to zero again. And I also show you how a period of 0% rates looks. Very smooth, very chill for trading, investing, and overall business. So for now, we can expect the range to continue until the next year. Per data, is very unlikely that something else happens, and we don't have too much news. Just as mentioned, let's follow the unemployment claims we have, and I'll be covering next week's also possible news in case there's something to cover. Let's see if we have, at least for the USD. Yeah, we will be having more unemployment, and ISM that always moves pips, so needs to be tracked. Try to track everything. Don't let anything slide, because we're in a very smooth position to take action either to the downside or to the upside. Money can be made, but I'm highly expecting the pressure to the downside, because let me show you my algo, or at least let me tell you where is the first no return point. It's at 26.96 per my strategy. 26. So gold needs to recover this price at least to be considered range again, because for now we are bearish. Like, don't worry about anything else. This price is bearish and the pressure is against the gold value. Normally you expect gold to be stronger against the dollar. I already also explained why. It's a real asset, blah blah blah. So for now the weakness will be controlled by the dollar actions, like the ones that the Federal can take, whatever Trump says or does. That's very important. When next year, when he takes possession, markets will react. And also you need to react to the data like unemployment and everything that the markets can give us. You need to add it up. Just don't, if you're relying only on your strategy, you're wrong. You need to add everything else to be able to at least anticipate. You don't need to modify your strategy. You need to at least be able to anticipate. Maybe you can be like, okay, this is too unstable for my strategy that doesn't like trends or big moves. I'm gonna wait. Or if you like volatility, also this is very bad moment, but you can wait to the next year. At least, as mentioned, when Trump enters the market, well, the USA president, or I forgot the English name, but when he's the big boss or the big cheese for USA again, markets will react, and we all know he's very vocal. He's already talking some stuff like, for example, in my country, he's gonna declare the cartels as terrorists. So that's very, very big news, because that can trigger a war. So war means money, and money means two things. Markets will react to the possible weakness or strength of the dollar, because this can be a good or bad outcome for the country. And also they will react to the people will try to, every opportunity they have to push the USA or the dollar to the downside, they will take it. So you can expect many things if some minor or big events like that happen. So you need to add everything to your strategy, and at least, as mentioned, be able to anticipate. So that will be the cover up for now. Have a great day.